Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. And through this channel, I'll be providing some stock analysis and an update on our $1 Million Challenge. So if anybody's not aware of this, this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is to try to achieve 201 trades, each with an average return of 3.5%, and it's not 201 consecutive trades. We do take into account losses. So further details about the process of the challenge and the procedure involved, as well as details of how to join, are in the description below. In the previous video, we looked at 4 penny stocks with huge potential for 2022, including tick symbol XELA and tick symbol MRIN. So please refer back to the previous video for an update of 4 potentially huge penny stocks for 2022. Before we start today's stock analysis, quick update in terms of what's happening in the markets. It was not a great day in the market today. The Dow Jones did shed 500 points. So we can see on this headline here from CNBC, oil is likely to now jump and go up quite significantly. There is a fear that Russia could soon take military action in Ukraine. So in the short term, this will not be good for the markets overall. What I'd now like to do is provide some update with regard to some news which affects stocks heavily shorted, also stocks which are under significant attack from hedge funds. And if we have a look at the screen here, there's a headline here from the Financial Times, and that is the hedge funds and activists have been threatened with new US disclosure rules. So this is coming from the SEC, Securities and Exchange Commission, and they are proposing halving the duration groups have to amass secret stakes in companies. So this is not good news for the hedge funds, but potentially good news for penny stocks and stocks like Metamaterials, MMAT, which have been under significant attack. So further down in the article, we can see some details about this proposal, and we can see here that hedge funds and other activist investors would have to disclose significant investment in US public companies within 5 days, halving the time they currently have to amass a secret stake under new rules that were proposed on Thursday this week. So this change is potentially going to force funds to reveal a stake of 5% or more, to amend that disclosure more quickly if the holding changes materialistically. So the move is part of a larger effort to shine a light in terms of what private investors are doing, and also going to make it much more difficult for activists to profit from secret stakes. So a lot of people have been concerned about what's going on in terms of manipulation in the market. So potentially good news from the SEC to try and crack down on this. So these disclosure rules have been in place since the 1970s. And at the bottom, we can see that investors currently can withhold market moving information from other shareholders for 10 days, and crossing the 5% threshold, which creates an information asymmetry between the investor and other shareholders. So basically once this is halved, it will make it more difficult for them to potentially get involved in manipulation. Let's now have a look at an update for the chart for ticker symbol MMAT Metamaterials. So this is the 5-day chart. So we can see approximately 5 days ago the stock was trading around about the $1.65 mark, and then from the 9th of February 2022 we did see a sharp increase in volume, sharp increase in the RSI, and the stock did go up quite significantly from $1.60 to around about at one point on a high very close to the $2 mark. And since then it has come down quite significantly, and we did have some bad news in the market today with regard to the political tensions in Ukraine with Russia. So that has affected all markets and the Nasdaq as a whole, including Metamaterials. So we did see a decline here, and we can see the stock is down close to the $1.79 mark. What I'd now like to do is provide a stock update for ticker symbol SENS Senseonics. This is a stock that has been featured a few times on the channel. There was some breaking news today with regard to FDA approval, so we're going to have a look at that now. We're then going to have a look at the impact on the share price and the stock itself. So before we look at the impact on the stock, let's have a look at the breaking news. So on the headline here, we can see from the company website, headline on February the 11th, 2022, Senseonics has announced FDA approval of the SENS, which is trademarked E3 CGM system, continuous glucose monitoring, for use up to 6 months. And it has now also provided an outlook for the business for 2022. So a great headline here, positive news. Let's have a look at the further details within this headline and what else the company released. So in the second part of the headline here, I'm going to focus on the key bullet points in the middle, and these are with regard to the SENS system and what this offers to patients. First of all, it offers fully implantable third generation sensor with proprietary SBA technology to enhance sensor longevity, demonstrating a mean absolute relative difference of 8.5% in their PROMISE study. So the industry leading 6-month sensor wearing duration makes SENS the longest lasting CGM system available on the market, with essentially 2 sensor insertion and removal procedures per year. So this is potentially groundbreaking. And finally, the removable smart transmitter held in place with a mild silicone based adhesive provides discrete on-body vibrator alerts and data transmission to a mobile app where glucose value trends and alerts are displayed. So this is great. So this 6 months now system represents a massive leap forward for patients, and also towards the mission of transforming lives in diabetes for people who have it. So the review by the FDA was delayed for 1 year due to COVID-19. Let's now have a look at the impact of this on the market. What I'm now going to do is share with you the chart for 1 month for ticker symbol SENS Senseonics. So on the screen here, you'll be able to see, unfortunately, the bad news is today the stock was down close to 33%, closing at around about $2.42. But if we look at the chart here for 1 month, we can see the run-up started around about the 28th of January, when the stock was close to $2. And at one point, we did see the stock go in excess of $3.80. And from that $3.80, after approval, there was a very, very significant and sharp decline in the stock. Lots of red candles coming down, closing around about $2.42. So what was the reason for this sharp decline after potentially good news in terms of FDA approval? Let's have a look at the reasons for this. So on the screen here, you'll be able to see 3 reasons I'm going to share with you in terms of why I believe the stock did come down quite significantly. And the first one on the top is with regard to the FDA approval. In many stocks, including many bio stocks, a run-up also actually includes potential for the approval. So when a stock runs up prior to approval, this includes belief that the approval will happen. So if we look at what happened with Senseonics, it did run up very significantly from around about $2.17 to around about $3.70. So that's quite a significant increase, close to 50%. So that run-up potentially could have included the approval in there. So that's reason number 1. Reason number 2, the stock is very heavily shorted. So a significant attack also could be taking place from the short hedge funds. The short squeeze score from Fintel, we're going to have a look at the details of that shortly as well, but it's 95.34, which is extremely high, and it's also got us rated as number 11 from 5,576 in terms of the stocks from Fintel, the latest information which we're going to look at shortly. So that's also quite significant there. Reason number 2. And finally, reason number 3, in terms of the 8K submission that the company provided, there is a little bit of negativity, we could argue, there in terms of the slow growth of the company. The company's got a market cap approximately 1.1 billion at the moment based on the share price. The sales projection we're looking at in terms of what the company released is $20 million in a market that is worth in excess of $2 billion. So let's now have a look at the outlook for the company. But before we do that, we're going to have a quick look at the short squeeze score. So on the screen here, you'll be able to see the latest information from Fintel. The short squeeze score is 95.34, and it's rated number 11 out of 5,576 stocks. So this is significantly high, and also indicates that the stock is heavily shorted. And at the bottom, we can see in terms of short shares availability, at time of editing in the previous 4 hours, at time of 3 p.m, just an hour before the market, there were no short shares available to short. So again, strong suggestion here of a significant attack as well. I'm now going to share with you a comment that was added in the Discord in terms of the live trading with regard to the stock. So if you want to get advanced notification and live notification of comments with regard to stocks, as well as due diligence and breaking news, You can join for as little as $9 a month. Details are in the description below. So on the screen here, you'll see that what I said with regard to the stock. I have said that I think it's going to come back very, very strong because what we now have the 180-day system, which is going to be rolled out. It is approved. The next main catalyst for this stock is going to be the biggest. That will be the groundbreaking one. That will be the game changer, and that is the 365-day system. So that's something that's going to happen more long term, and that will be huge, and that will certainly be the biggest catalyst for this stock. So the key risk right now in terms of Senseonics is timing the market. So in terms of timing the market, nobody is able to time the market. The best analysts are not able to time the market. Nobody knows the bottom, and nobody is able to buy at exactly the bottom. And if they were, everybody would be a millionaire who knew the secret to that, and that's not possible. So with Senseonics, it's a similar situation. We don't know where the bottom is. We don't know how low it's going to go up. But what I am fairly confident of is a strong rebound. This is FDA approval. This is good news. So with the good news, we've had a fall in the stock. So that should not normally happen, but it does happen in many situations, and it's happened now. So the company have good news. So in terms of long term, if you haven't already invested in this stock, it's definitely a good opportunity in terms of a potential buying opportunity. It also represents a good opportunity to average down as well. So in terms of finishing off with a prediction, I'm predicting there's still potentially a room to go down a little bit more. We don't know how low it's going to go down. Maybe it could go below the $2 mark, difficult to say, but what I am certainly very confident of is a very strong rebound up. The company is now going to be rolling out with the FDA approval, the 180-day system. They're going to be working aggressively towards the 365-day system. Once that gets through, the Senseonics will be a great stock to hold for the long term. And in terms of my prediction for the end of this year, I'm certainly looking at between a price of $4 and $7. And finally, if you'd like to get advanced notification of our weekly watch list and also join us in our $1 Million Challenge, you can join for as little as $9 a month. Details are in the description below. Thank you very much for watching. Please stay tuned.